Welcome to Subramani. So, based on my experience, I was just wondering how investors evolve over a period of time. So, initially, I remember my first transaction would have been 50 Int Suzuki or TVS Suzuki as it was called, and I think it was 32 rupees. So, my transaction size was 1500 rupees. And I thought that was a big amount of money that I was risking, and it could go up, it could go down, and then maybe at 35 I sold it off, very thrilled that I had earned 250 rupees. This is way back in 1979. 250 rupees was not a small amount of money. Not that I withdrew it and spent it, but I obviously bought something more with it. But today the size of my transactions have obviously changed. The reason to buy has changed. I don't trade as much as I used to trade when I was 17, 18, 19, 20 years of age. But I also created a portfolio. So today I'm more a portfolio creator. I do trade. It's not that I don't trade, but very small portion of my portfolio would be in trade. Most of my portfolio, maybe 80-90% would be in investments of my equity portfolio. Mutual funds, of course, I very rarely redeem except when I need money or I feel that theme has played itself out, then I redeem. In case you're wondering why I have investments in mutual funds and equities when I can do direct equities, is certain things you can never do on your own. I can never invest in an international REIT sitting in India, right? I can't. So that I have invested in a fund house which has got an international REIT, and similarly in a pharma industry where you don't understand anything except that you should buy 2-3 shares, and other than that there are so many smaller things to do in the pharma industry. I prefer a fund. So I have 2 funds, in fact, one in which I am doing an SIP, one in which I am doing an lump sum. Similarly, hybrid funds, etc., where you don't know when to put money in equity, when to put money in debt. You put some money in an hybrid fund and let the fund manager decide how much to put in equity and how much to put in debt. Then I see people changing with the way technology is to be used. I come from a time from say 1970s and 80s when to buy a share you have to pick up the phone, speak to your broker, and he'll say थोड़ी देर बाद फ़ोन करो, और अरे आदमी रिंग में चला गया. So change of technology. So using the phone or physically going to the broker's office, sitting there, asking him to buy, then checking at what price he has bought, and then that was important because I was also a broker myself, so I had to do that for my clients. I didn't have to do it for myself, my own self I could buy. And then came 1992, 93, and then we started using technology. So many things have evolved. In fact, to do research, we had to go around searching for balance sheets. It was not easy to find. Companies would ask, why do you want the balance sheet? So we had to buy one share in every company so that we could get the balance sheet, right? And they would get a big full balance sheet. Thank God to some initiative today, you're getting it in soft copy form. You can still get it if you write to them, but yes, the importance of technology has definitely evolved. Falling of brokerage rates to me has not been a great thing because I've been more always been an investor rather than a trader. So falling of brokerage rates has not mattered, but yes, having long-term capital gains at zero helped because you could just sell some share and buy another share without worrying about tax. Today you have to worry about a 10% tax, and 10% can hurt because there's no indexation, right? So all this is important. The way we interact with technology has definitely changed. Also, what goals we have in life changes. When I was young, maybe I was trying to create wealth. I don't really know because I was not spending it really. And today I'm just it's a feel good that my portfolio is up. I don't think I can exhaust my portfolio in my lifetime. My dividend income should be able to take care of my requirements within reason, and so I don't think in so many years of my life I have sold something to invest or sold something to spend. It has never happened. I have switched, which means I have sold share A and bought share B. I have sold share B and bought share C. That has happened. But have I sold something to buy anything? Answer is no. Long back, funding a house would have happened, but buying a car was with my own money, buying office was with my own money. I never had to borrow, I never had to sell my shares or anything, any assets to do that. So the way you look at life, the way things change in life, all that is going to impact how you are investing, what you are investing, how much you are understanding. Because for me, teaching also helped, because I went and met a lot of people, I saw the mistakes that they made. That was fantastic learning, right? So I met doctors, I met financial advisors, I met chartered accountants in my journey. So I realized what mistakes they were making, what they should do, what they should not do, etc., etc. So that was also useful. It's also very important to understand that when you enter the market, what happens is important. So suppose you entered the market and next day was October 87 and the market fell 22%. Let's say you put 1 lakh of rupees, which was a big sum of money in 1987. Yeah, let's talk about the US market, because the market fell 22.5%. So you put $100 and it fell 22%. Or you entered in 1992 at Harshad Mehta peak, and the next year I think the market fell 46%. Let me repeat, 46% is how the market fell in 1993. That would have had a devastating impact on you. Yes, of course it had a devastating impact on us also, because from 92 to 2002 the market did nothing. Though 2000, 2001 there was some boom in technology, but technology would not have been on a part of your portfolio at that stage, or even if it was, it would have been a small one. So all that would have had a terrific impact or a terrible impact, depending on how you look at it. But suppose you entered in 2002 or 2003 and you stayed until 2007 and you had bought the right shares, you would have had a fantastic ride, and then you would have been, you would have said, oh, I should always be in equities, right? So all those things, what impacts the market is, what impacts your position in the market is also depending on your starting experience. After you have started, like I started in 79, so to me handling 92 to 2002 was comparatively easier. But if I had entered in 89 or 91, maybe I would have found it more difficult and I would have run away from that. And the fact that I was staying in Gatco Permanent, everybody around me was also investing, so that it made me feel good. Oh, not only have I lost money, they have also lost money. That kind of a feeling, your Three Idiots movie kind of a feeling, that oh, everybody is losing money. Then you feel more secure, saying, oh, all of us are idiots, all of us have lost money. You will also face a lot of distraction. A lot of people will come and tell you, oh, you're mad, why are you investing, trading is much better, why don't you do F&O? A lot of distractions happen. Luckily for me, all those distractions happened at a later stage in life. But today's youngsters, whether they are doctors, whether they are marketing people, whether they are in any profession, they want to be in the market trading, doing F&O. And they justify saying, oh, I have never lost money, etc., etc. In the bull market, nobody loses money. You have to be very stupid, foolish. You should have gone short to lose money. So you will always make money. Whether you make 10% or 12% or 13% is up to you. But if you think that you're confident of earning 12 lakhs and 10 lakhs is your annual expenses and you have 1 crore corpus and that is sufficient, you're wrong, completely wrong. Right? But these things you have to know, and you have to evolve and say, okay, what happens if in a year I get minus 5%? I will deploy money from the capital for my household expenses, and my capital is also being lost in the market. Then can I handle it? Right? So that is the question to answer. And what happens if the returns from the markets keep falling going forward, which means I will then need a higher and higher corpus. So all this is important for you to learn, and this is how investors evolve, and this is how you should evolve and learn how to invest better and better. Thank you.